know whether you're trading gold or silver, because this is a bit confusing. I found it very hard to start. When I actually started trading, I didn't know exactly what XA. I used to confuse XAG and XAU. So XAG is silver, know it by the price. XAU is gold. Right? So if the price is above 1,000, that means you're trading gold. But if the price is less than 100 USD, that means you're trading silver. So you get that properly, because this is a bit confusing for some people. You may find it hard differentiating between this and this. So if you put your mouse above gold and see that under the calculations, the first pop-up is gold. 1 troy ounce is Australian dollar. Next one is calculation CFD. You put the mouse pointer on a pair, see certain Forex instead of CFD. So if you are trading gold, you're basically just trading CFDs. Trading gold, trading CFDs. That's the thing. If you are that person who's trading, good afternoon. So today's webinar to look at gold, see what we expect with gold, silver. So how patterns we expect, patterns that are currently running. See. So we put that straight away. First thing that is a gold is a metal. But there is a talk about them at the same time, both same direction. Gold is a cell. You see the same cell on silver. So if you get a trade on maybe gold or silver, so you can say the same thing. If it's a trade, buy on gold and look for the same trade on silver. Two are basically moving in the same direction. So let's load my screen. Share this slightly. It's okay. Gold and silver are supposed to be in the same direction. If it's a trade on one, expect a similar trade. So this is empty form currently on. Basically, gold and silver are in the same direction. So which means if we get a clear signal, gold, we're supposed to translate the same thing on silver. So second hand. So we have it. Move straight to that AU USD. This is gold itself. The price is normally above 1,000. This is also gold. The price above 1,000. It's also gold. The price is above 1,000. And then this is silver XAG. So the other way to know whether you're trading gold or silver, because this is a bit confusing. I found it very hard to start. when I actually started trading, I didn't know exactly what XA. I used to confuse XAG and XAU. So XAG is silver, know it by the price. XAU is gold. Okay, so if the price is above 1,000, that means you're trading gold. But if the price is less than 100 USD, that means you're trading silver. So you get that properly, because this is a bit confusing for some people. You may find it hard differentiating between this and this. So if you put your mouse above gold, you can see that under the calculations, the first pop-up is gold. 1 troy ounce is Australian dollar. Next one is calculation CFD. You put the mouse pointer on a pair, see it's written Forex instead of CFD. So if you are trading gold, you're basically just trading CFDs. Trading gold, trading CFDs. That's the thing. If you are that person who's trading gold, you're basically just trading. So we'll start off with the silver. Let's start off with silver first of all. The first thing is to get the overall trend on this symbol. So speaking now, price pulled back down and went up to somewhere around this point. So this is like some V formation. If the price is indeed is continuing down, we actually expect it to go up to this point. Level the one 4.24. If the price is to proceed significantly to the last side, then the best place it has to go back to is up to line which I've drawn 4.24. So as it is now, we are seeing some consolidation. The price is, instead of proceeding downwards, actually consolidating. And let's see why that is, why the price is consolidating. First of all, I will use fib levels, swing low, then you have this as the swing high. So technically, you can see that the price actually went below 61.8, which signifies the fact that the price may likely continue down. So after this, the fact that the price went below this level, possible sign that may heading downwards, maybe up to 100% retracement. So if the price does not go back to this level, there's actually this, have this one, also have this, are the levels where technically want price to get to. Also this. The reason I've drawn this close to each other, this is these two is a very good 61.8% being a very good level at the top. So if the price if the price now is to proceed upwards, then we actually expect it to go up to this level, 61% fib level, or it come down up to this level, 13.4. These are the only good levels where if the price comes back up to, that's the correct place to trade from. But if the price proceeds up and even goes beyond this level, then that will mean you're continuing. So this is according to the monthly. If we check the weekly, it may be different. Just the weekly chart is what we have. Daily, sorry, weekly chart. Still have a support. This support is supported from the past. So we have a support. It's a big move up. It comes back as support. So if the price can come back down up to 13.96, then this will give us the correct place to pick a buy from. So as it is now, technically, there are some shapes which we saw in the past, but I don't remember if we actually did them, we traded them. So don't forget this. These shapes are really significant. You can trace them while they're happening, not just when they have happened already. If you can look out for them while they're happening, give you the correct place to trade from. So if you have this, if you have maybe this is a good level, a resistance, there's a break above, it came back, support, price comes back to this place here, that will give you the correct place to buy it from. So that is in the past. Currently, price is here. So on this one, actually have a level here. Have a level here. It's a very good support. Very, very good support. We had a resistance. Price went up, came back as a support. So far the price has not been able to come back the second. So if the price can successfully come back up to this point on the weekly chart, this based on the correct place to pick buy from. So we are technically just waiting. On the upper side we have this. So one more thing, if we are doing when you're doing your analysis, like maybe you're looking at euro, I mean this pair, this symbol, not find yourself in a case where only you're looking at the monthly chart, scale down on the same chart, leave that monthly chart, move to the next, open the same chart on a different window, but now use that on the weekly. So after you draw this, do the same thing with the daily. You don't start changing, because if you change, it means you shift all these lines. And that's one thing we are trying to avoid, shifting lines while we are trading. We want to be able to see what happened in the monthly, what we expected in the monthly, expected in the weekly, what we expect on the possible works, what we expect on the 1 hour. So the reason I've not looked at Forex is because Forex is closely related to the monthly and weekly. So if you're using these three, use this for entry. 1 hour for. So look for trades on 1 hour chart. You analyze the chart based on the monthly, weekly, daily. Then when it comes to entering trades, use the weekly, the 1 hour chart. That way you have a very small stop loss and your entry will be much more precise than if you are using the monthly to enter trades. So that should be it on the weekly. These are the levels we're looking for. We are having a resistance, having a support, and we actually expect price to get back to this level, this support. So we also have this very good level. This not look significant for now, because actually the price went up, it came back and support, then there's another break. So it may not look significant, but from my experience, this one here, the move that we saw to the lower side and then the move back up is actually a false breakout, which means this could give us the correct place to buy from. Trading, this will give you the correct place to buy from. This one here will give you the place where you want to buy from. So if you successfully, if the price gets to 17.43 on the weekly chart, that is if you are watching the weekly chart, have your stop loss below this zone here, or the false breakout. So I'm basically looking at this as the false breakout, this one, as the false place breakout. The fact that the price went below, came back up, this is a possible false breakout. So technically the price should pull back down up to 17.43 so that we can pick a buy up to this resistance. That is something like this. That's what could happen. So this is the place to buy it from. If you are trading weekly chart, we're actually waiting for a buy from this point. Then we are also waiting for a buy when the price gets to this zone 15.95, around 15.95 to 16.20. So this is the zone where if you pick a buy around this level here, but then the price does not go up, instead it goes down and even hits your stop loss which you set below this level, then this is the next best place to buy it from. So the other next, if you buy it here or you buy it around the lower zone, take profit must be fixed around this zone, the upper one. So it looks like it's very far, but the price may actually get back up to that zone. So buy it, have the patience to hold it. Hold it up to 20.34. That's simple. If the price is to go upwards, hold it up to this level, 20.34. So we look at the same chart now on the daily so that we are able to see precisely. I've not looked at I've not translated the same thing from the weekly, is because I want to find if the same information that I'm seeing on the daily, on the weekly, same information on the daily. So if they're the same, then it means possible that correct, the buy which I'm currently expecting is actually a genuine trade. So on this chart, I have a level here. This looks like a very good resistance. Yeah? Very good resistance. And then it's a break above. So as we're speaking now, the price is still above that zone. As we're speaking now, we still have price above zone we actually took a buy from. So if we were to trade it previously, we actually could have taken a buy from that point. Could have taken a buy also from this point. So if the price can get back to this place here, then this will give us the correct place to buy it from. If the price can successfully get back to 16.89, 16.56, then somewhere around this zone will give us the correct place to buy. So simply, I'll use like the fib level. I want to see that retracement. How much is that? So that's came back first time. Should come back again. So we had this one, second one, and the third one. If the price can pull back to 50.0% fib level, that is the correct place to buy from. So basically, the buy we are seeing on the monthly, weekly, are actually the same buy which we are seeing on. So that means if you see a buy on silver, maybe around this level 50.0, take that trade. Buy it, have your stop loss, as we've said on the weekly, have your stop loss here, and then have your take profit here at the swing high, which is so we actually expect price to come back up to this point before it proceeds to the up. That's what could happen. So basically, if you didn't buy it, this one, if you didn't buy the first one, first of all, you still have the chance to buy it. You still had the chance to buy it. Chance, have the other chance, which is now this one. So we move to the last symbol, now gold. So gold will do the same thing. We start off with a monthly. And just look at how this chart looks. This is why I say gold and silver are the same. They are moving almost in the same way. Look at how big this move was to the upper side. And there was some retracement. If you check silver on the weekly, it's the same thing. It's a big move up. There's a retracement. So just that in silver, the price is not retraced back up. Gold, we have a significant upper side. So if you are doing gold, if you are trading gold, seeing a very good trend line, this point upwards. With this, also seeing this as a good level on the monthly. So you start by first of all identifying your levels on a higher time frame. If you can see that this is a monthly level and the price is approaching, that means you're supposed to be concerned about it. Have this. So have this one. So technically, gold is a buy. And the main reason being that the price actually broke above level, still above that level. The main I'm saying gold is a buy. The price went above zone here. This was a very good resistance in the past. The price went above. As it is now, there's no level other than the one which I'm talking about at the top, this one. There's no any other level. So we expect the price of gold to move upwards up to this resistance. If you're trading gold, actually expect price to go up to this resistance. Expect it to move up to the resistance at the top. But being weekly, it could happen. So as I've mentioned, the main reason I'm switching to the same chart, I'm not using the same chart to drawn based on the. This one was drawn based daily. So that gives me more precision. This level here, here, so have this one. have a support previously, it's a break, it's a resistance, resistance. Price basically went above, was some struggling before we continued upward. So if you look at the weekly chart, this is actually a buy for you. If you see a setup like this where there was a resistance and then the price broke above, pressed back but could not close below. Actually, this is always a very good formation. You see an inside bar followed by an engulfing candle. That means the price is proceeding upwards. When the price breaks above a level, then the next candle after that break is actually an inside bar. It's followed by an engulfing candle. That means we are so those are some of the few setups somebody should. If the price is to proceed upwards and it has gone above a level, look for inside bars and engulfing candles pointing in that direction. That is, if the price is upwards and you expect it to proceed upwards, look at this. Look at this resistance. So have resistance, a break, fast retracement, move up, it's another retracement. So as long as the price is held above this zone, expect it to proceed much higher. So we had the first zone, which is on the lower side. This one, very fast zone, very fast zone. Sorry, very fast zone. Fast zone. Also have the next one. Then we have the tip, which is at the very top. So this is the resistance. So if we are looking at this chart now for a very good trade, actually supposed to be in a buy. As we're speaking now, this should give you the correct place to pick a buy from. This is what I'm saying. On the monthly chart, there's a buy. Weekly chart, we have the same thing, which is buy. So overall, the price needs to get to this resistance ultimately. If you are trading gold or silver, they're moving in the same direction. Therefore, look for buy positions. Wait for price to retrace back, pick trades. If the price pulls back and gives you a buy signal, pick that buy. So basically, we are into a buy. Speaking on the weekly, check daily to confirm the same thing. The same thing is now happening on the daily. Pick it. According to, I'm not going to draw the lower line because it's the same one. So if you are now trading the daily chart, this will give you the correct place to pick a buy from. If you're trading daily chart, this will give you the correct place to buy from. So the buy which you are actually seeing on the monthly and on the weekly are actually supposed to be occurring around the 1551.0, 1542.71. That's the zone where if the price comes back up to, that will give us the correct place to buy from. So we had the chance to buy it the first time, and this happened. We had the second chance to buy it, and we'll still have the chance to buy it if it gets to that zone. So overally, we are going to be picking trades on the 1 hour based on this level, but our take profit is based on the weekly, which is at the top. So if the looking for clear buy signals, expecting price to go up to the resistance which you mentioned here, 1582. So that should be the expect buy on silver. So thank you very much. That should be the end of today's webinar. Again next time. So see you. Thank you.